let's dive into one of the most fascinating and, let's be honest, one of the trickiest assets out there, gold. Today, we're going to pull back the curtain on its wild moves and break down 3 fundamental principles that come straight from a pro trader's playbook. I love this quote from our source because it just hits the nail on the head. Gold is exactly like that mechanical ball. It's volatile, it's unpredictable, and it can throw you off in a heartbeat. But man, if you learn how to ride it, if you understand its rhythm, the payoff can be absolutely huge. It's an incredible trading vehicle, but you've got to know the rules of the game. So that's the big question, right? How do you actually get on that bull and stay on? How do you navigate these massive, chaotic waves in the gold market without getting totally wiped out? Well, that's exactly what we're going to figure out today. We're going to build a solid framework for taming this beast. And here's our game plan. First, we'll get into the real personality of gold. Then we'll look at the fundamental drivers that make it move. After that, we'll cover a professional strategy for actually trading it, and we'll wrap it all up with 3 simple golden rules. So, Section 1, let's really get to know the true nature of gold and figure out why it moves the way it does. Look, if you only remember one single thing from this entire breakdown, make it this: gold trades on fear. That is the magic word. When the world starts getting nervous, we're talking recessions, out-of-control inflation, geopolitical drama, that's when investors sprint to gold for safety. And that fear is the rocket fuel for its biggest, most explosive moves. And this is just so critical to understand. You know, gold actually spends most of its time kind of going nowhere, just chopping sideways in a stable, confident market. It can be pretty boring, actually. But when chaos hits, when that fear takes over, that's when you see those massive one-way freight train moves. The trick is to know which environment you're actually in. And this slide, this just shows it perfectly. Take a look at 2008. The global financial system is on the brink of collapse. Fear is everywhere. And gold goes on an absolutely historic bull run. Then what happens? Things calm down for a few years, and gold just drifts sideways. But then, bam! 2020, the pandemic hits, fear is back, and gold just rips higher again. It's a textbook example of fear driving the market. Okay, so if fear is the fuel, what lights the match? Well, that brings us to the fundamentals, the specific economic signals that the pros are watching 24/7 to get a read on the market's fear level. You can think of these as the dials and gauges on a trader's dashboard. You've got interest rates, the health of the economy, inflation reports, central bank policies, and of course, those big geopolitical wildcards. Every single one of these gives you a clue about which way gold might be leaning. Let's start with interest rates, because it's one of the biggest drivers. The general rule is pretty simple. When central banks start talking about cutting rates or making money easier to get, that is usually very bullish for gold. But on the flip side, when they start hiking rates aggressively, that can create some serious headwinds for the gold price. But here's a pro-level tip. It's not just the headline interest rate you need to watch, it's the real interest rate. And that's just the interest rate minus inflation. See, when real rates are low or even negative, holding gold, which pays you 0 interest, suddenly becomes way more attractive. That's why the pros are obsessed with real rate data from places like the Fed and the ECB. And then there's the economic data. A simple way to think about this is that gold is kind of like a barometer for economic health. When you start seeing weak numbers, job losses, slowing growth, that's a sign that there might be a storm coming. And that's when investors rush to the safety of gold. Okay, so we've got the why and the what behind gold's moves. Now for the really important part, the how. How do you take all this knowledge and actually apply it with a professional strategy? This brings us to what might be the most powerful principle of all. You have to respect the momentum of gold. Once one of those fear-driven trends really gets going, it can go so much farther than you or anyone else thinks is possible. Our source actually told this great story about learning this lesson the hard way. He set a price target for a gold move, a 10% move, which he thought was pretty generous, but the market basically just laughed at his target and blasted almost 14% higher. It's the perfect reminder of why trying to be a hero and call the top is such a dangerous game and a strong gold trend. So what's the professional move? It's a technique called a trailing stop. Instead of trying to guess where the top is, you just let your profits run and you protect them. So you get into a trade, you set your initial safety net, your stop loss. As the price moves up in your favor, you manually move that safety net up behind it, locking in profit. It goes higher, you move it up again. This way, you stay on for the whole ride and you let the market, not your own fear or greed, tell you when it's over. And that leads to this final powerful warning from our source. I mean, it doesn't get much clearer than this. Trying to fight a powerful gold trend, trying to short it or sell it when it's screaming higher, is one of the fastest ways to blow up your account. You just have to respect that momentum. All right, let's bring it all home and recap the 3 golden rules for trading gold. So, here you go, the entire framework in a nutshell. Rule number 1. Understand that gold is a creature of fear. Rule number 2. Keep your eyes on the fundamentals like interest rates to see if fear is building. And rule number 3. Once that trend starts moving, get on board and respect its power. Don't ever fight it. These 3 rules give you a complete mental model for approaching the gold market like a professional, and that leaves us with one final thought for you. Using this exact framework, take a look at the world around you right now. Look at the headlines, the economic data, the geopolitical tensions. What phase do you think the gold market is in? Are we in a period of chaos or a period of stability? Because the answer to that question might just be your key to figuring out where gold is headed next.